In this wild crypto market, not every coin can stake its claim, right? But the Open Network, or TON, is proving everyone wrong. Big time. Born from Telegram, a messaging giant, TON is more than just a blockchain. It's a bold statement for a decentralized ecosystem that's lightning fast and super easy to use. Today, we're diving deep into TON and its coin. What makes it tick, why it's crushing it, and where it's headed. I'm Lone, where we break down finance and investing. So simple. Even a 5-year-old gets it. We give you a real no-bees look at investing. Even if you're starting from scratch, just a heads up. This info is from multiple sources, and my personal take. If anything's off, hit me in a comment. First, let's trace TON's roots. It runs on the TON blockchain, founded by Telegram's CEO, Pavel Durov. A tech mogul behind VK and Telegram is a fierce advocate for internet freedom. His strong stance led to clashes with the Russian government, eventually costing him his citizenship. But even then, Durov and his brother Nikolai had already launched Telegram, focusing on encrypted messaging and zero censorship. This very freedom, ironically, caused Telegram to face scrutiny over content moderation, even leading to Durov's recent arrest in France. These challenges pushed Durov to embrace blockchain, believing it was key to true online freedom. In 2018, Telegram dropped its white paper for TON, aiming to integrate blockchain directly into the app. Unlike Facebook's Libra, which crumbled under regulatory heat, TON faced its own hurdles. Initially Telegram Open Network, it rebranded to the Open Network. After legal issues with the U.S. government, the U.S. worried big companies issuing crypto could mess with the dollar. Telegram's 2018 ICO was massive, raising $1.7 billion, the biggest crypto fundraiser at the time. But in 2020, the SEC sued Telegram for not playing by the rules, citing risks to investors. Under U.S. pressure, Telegram ditched the TON project, returned investor money, and handed the code to independent developers. Durov's move was genius. It dodged legal landmines and let a global dev squad build it out. Just like how former Libra devs made billion-dollar blockchains like Sui and Baptos in 2021, the Open Network officially launched, independent and ready to roll. TON keeps a tight bond with Telegram, with products and apps integrated directly into the messaging platform. You can use TON to buy in-game items, in Telegrams, tap to win games, or send money with super low fees. TON is the main currency in its ecosystem, used for trading all sorts of tokens, including meme coins. These utilities pump up the demand for TON, making it a hot commodity. Now, let's talk tech. TON is a next-gen blockchain built for high-demand finance and tech. Back in 2018, blockchain faced a trilemma, balancing security, decentralization, and scalability. Optimizing one often meant sacrificing another. It was a tough nut to crack, but TON solved it with its multi-blockchain architecture. It uses a multi-level structure, letting many blockchains run at once in one unified system. This boosts scalability and transaction speed, avoiding the congestion traditional blockchains like off. Each subchain handles specific transactions, while a master chain keeps everything in sync. Result: TON scales like a beast without slowing down. Plus, TON's transaction fees are ridiculously low, around 2 cents, 100 times cheaper than Bitcoin's $2.23. This is thanks to proof of stake, which is efficient and energy. Most new blockchains use TON also has decentralized storage, letting you store data directly on-chain, boosting security and enabling new services. Bottom line, TON's tech is cutting-edge, tackling scalability, costs, and enabling a robust dApp ecosystem. Every blockchain needs a strong ecosystem, from DeFi apps to games and these drive demand for the native coin, pushing users to engage on. Some chains go hard on gaming, like Ronin or Jew, offering huge rewards. But TON's secret sauce for attracting hundreds of millions of users? It's the Tap to Earn games on Telegram. Players earn rewards by simply tapping their screen. Massive hits like Hamster Combat and Notcoin blew up, with Notcoin alone dishing out hundreds of bucks to players. Thousands more Tap to Earn projects are in the pipeline, many built on Ton and using Ton for transactions and in-game purchases. You've also got DEXs like STON.Fi holding $177 million in assets, and lending platforms like AVE, while TON's total locked assets of $340 million don't match it's a strong start. Okay. So Ton's got users in solid tech, but how's its price been doing? In early 2021, after the SEC drama, Toncoin wasn't officially, its value was practically zero. By late 2021, it hit some exchanges like OKX, but few noticed without a Binance listing. 2021 was grim for crypto, with Bitcoin crashing, hitting new coins like Tonha. In 2022, Ton bounced between 50 cents and $1, gaining traction due to its Telegram link and a growing community. Mid-2022 saw a pump to $2.50, fueled by news of Telegram's continued partnership with Ton for wallets and even in a bear market, Ton held strong, showing stability and community trust. Early 2023 saw Ton around $1.30, $1.80, but mid-2023, Ton Wallet integration into the Telegram app launched, soaring the price past $3. This was a game changer, giving Ton access to Telegram's massive user base. By early 2024, it hovered $2.50, $3. Then, back. Ton got listed on Binance and Tap to Earn games exploded. TON quadrupled from $2.10 in Jan 2024 to an all-time high of $8.10 in July 2024. Currently, Ton is number 11 by market cap, boasting $13 billion. The Ton team ran a brilliant marketing play, leveraging Binance and Tap to Earn to reel in millions. But can Ton hold this spot? What could hit its price? While the Telegram game ecosystem is huge, not all games deliver. Only Notcoin and Doc truly nailed big air. Others, like Hamster Combat, left players salty with busts. This matters because Tap to Earn still drives Ton's price. If the ecosystem strategy isn't sustainable, investor trust could dip. Still, Tap to Earn is booming, with crypto projects launching games on Telegram to reach its massive audience. Even big exchanges like Binance and OKX are jumping on this FOMO, introducing Telegram Mini. Also, if you heard Pavel Durov, Telegram's CEO, was recently arrested in France. Right after that news, TON's price dropped 20%, wiping out $2 billion overnight. Durov's legal drama will impact Ton in the short term. But personally, I see these as mostly short-term noise. Long-term, a coin's trend is all about community trust. And the Ton community has massive faith in its Telegram-centric ecosystem. Thousands of mini Tap to Earn games. Indexes Telegram as the roots of this giant Ton tree. Strong roots mean a thriving tree. Telegram's stability is crucial for Ton's long-term value. So, the big question, when to jump into Ton? Currently, TON's chilling in a liquidity zone with support at $5 and resistance at $8. This zone kicked off in April, when Ton pumped 3.5x in 2 months, then corrected 40% before hitting $8 again. Right now, $5, $8 is its main trading range. Wyckoff says this trading range could be accumulation or distribution. We're in phase B, so it's early to tell. But looking at the pattern, Ton is near the $5 support. This could be a good entry if it bounces back to $8. However, if it breaks $5, some analysts predict a wick down to $4 or $3 before re-entering the range. That's your short-term play for swing trading. TON's $13 billion market cap is solid for a sluggish crypto market, but historically, even less robust blockchains have hit $50 to $60 billion in bull runs. So, TON is still expected to 2x or 3x in 2025 if financial markets pick up. But remember, this is just analysis, not financial advice. Do not go all in or invest blindly. High potential, but equally high risk. And that's the lowdown on TON. Thanks for watching, fam. Don't forget to like and subscribe for more insights.